Hello traders, John Hyaden here once again with the daily revision. Before we start, I suggest you stop the video and read the general risk warning. It is very important. Moving on to upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendars so you would be able to trade and notice them before and after the announcement. Main focus today will be on two currencies. The first one is the pound, which will face high volatility during the day due to many reports, including the interest rate decision by the Bank of England. Try look for direction after 12 p.m. or maybe 5 minutes after 12 GMT, of course, in order to make good short-term trades. According to analysts, things should not change for the currency, but any slight change in results will cause strong movements. The second currency is of course the dollar, which is the most important one for today, as we will get hints on the US economy before the announcements tomorrow. If someone doesn't know yet, haven't heard about it, the unemployment rate and the non-farm payrolls will report tomorrow, which may set the interest rate decision on December. Moving on to the US market, Wall Street trading session yesterday closed a bit lower. The S&P 500 went down by 0.35% and the Dow Jones by 0.28%. Not much, but the reason for the downward movement was due to Yellen's speech, in which he gave hints on possible interest rate increase next month. Of course, traders stopped being brave like they were a few days ago, and they focus now on two important reports tomorrow. As I said, the unemployment rate and the non-farm payrolls, which in other words will tell us how the US economy is doing. According to analysts, the results tomorrow can be very crucial for the zero policy environment since 2008 in the USA. So in conclusion, good results tomorrow will make investor concern over the interest rate decision, or in other words, the market will go down because higher rate equal lower market. If the results are not going to be good, trader will still be afraid, however, with more hopes that the decision will be postponed like in the other announcements. It is a bit riskier to trade stocks and currencies related to the US economy or the US dollar. Analysts say it will be better to trade in favor with the sellers, since traders will dump some of their possessions before the announcement tomorrow to spread risks. As you can see from the right, this is the S&P 500 daily chart. We are just on the resistance area here, and we got a candle called red ochre, which is stands for outer key reversal, which may reverse the direction. That's another great hint for us to understand that we should trade in favor with the sellers. Earning reports, we are still in the middle of the third quarter report session. Here we'll keep you updated with important events. These reports will either help the market to reach higher highs, or it will cause hard time for traders to set a direction. Today, almost 60 companies will announce their earning reports for the third quarter. High volatility and fights between buyers and sellers can cause strong movements in the market, and remember, we are day traders who make money out of strong moves. But since it is impossible to trade all 60, you can trade the big indices, such as the S&P 500 futures or the Dow Jones, etc. As you know, the big indices are like the basket of all stocks. If you want to see who is reporting every day, you can write down on Google earning report calendar. It will bring up detailed charts with upcoming events. Commodities, gold. Traders continue to dump their possessions with gold as fear from higher interest rate next month shows its signals by the Fed. Using the technical analysis approach, we can see we are still moving downward and yet reach the support level. Therefore, there are still good possible trades in favor with the sellers until we reach the $1,104 per ounce. Crude oil, what a shame. After a beautiful trading session on Tuesday, the commodity fell down yesterday and lost its entire gains. The reason for the drop came from the positive results of US stockpiles, which shows growth in productions. Or in other words, more supply, lower price. Using the technical analysis approach, we can see the oil drop hardly yesterday, but it stopped and rebounds on the support level, the 100 moving average you can see here in blue. from here, according to analysts, we should see the commodity recover. So that was yesterday. That was Tuesday. From the left, you can see the big green candle, and that was yesterday. A big drop due to the production numbers, higher production, and we're just sitting on the support here. And from here, we should see the commodity moving toward higher highs. That's it for today, guys. If you have any question, you can contact me on binaryoptionsreview@gmail.com, and I'll see you again tomorrow.